straight into it, yeah. In 2018, the economic growth slowed down towards the end of it in 2018. And that wasn't due to the trade war. It was due to the effect of the deleveraging as the government continues to reduce the debt in the system. However, with the trade war in mind, the government felt that there is a need to stabilize the economy. So the government came out with a lot of policies to support the economy. And what we like about the policy this time around is that they're not going their old ways. Some of the new ways of stimulating the economy is much more mature. They're not just using monetary stimulus, they're also using fiscal stimulus by cutting income tax for the individual, by cutting VAT, which will help consumption, by cutting corporate tax rate. Basically, the government is supporting the private sector and supporting lots of companies. And this will help the domestic consumption longer term. And this is the best way to counter the impact of the trade war. But anyway, in our view, the trade war has not the big impact in the sense that a lot of the exports as a percentage of the GDP is not so high anymore. Export is no longer a big part of the GDP. It's less than 15% of GDP growth now. What is driving GDP in China today is coming from domestic consumption, from the service sector. And the government is still spending on infrastructure, but that is also taking a smaller proportion of GDP growth. It's about 20 to 30%. So service sector, domestic consumption will continue to be developed by the government, which is the best way to counter the effect of the trade war. The Chinese economic growth has been more reliant on service sector. More than 60% of its GDP growth is now coming from domestic consumption, which is shown in the service sector, right? People who are consuming more, people who are buying more products, premiumization, people buying better products. You heard of all the Tencent, Alibaba, e-commerce. These are all the main drivers of economic growth. Whereas export is still about 20% of the GDP growth, but that has become less important to the overall GDP development. And so I think the government will come up with a number of measures to support the economy if there is a big impact from trade war. But from what we can see right now, China remains a big trading partner to the US. So they're still exporting to the US. They are still passing on the tariff. So maybe the US consumer will have to bear some of the increase in tariffs, not just the Chinese manufacturers, it's also the US consumers who have to face some of the increased prices. So the pain is not just one-sided, the pain is two-sided. The manufacturers in China as well as the customers in the US. So eventually we believe that there will be some sort of a deal between the two, longer term. I don't think any Asian country would want to see the trade tension escalate between the US and China. Because if that happens, it's going to affect the overall global economy. And that will also impact on the rest of Asia. There might be more factories moving to other parts of Asia, but if global trade, global economy slow down, the pie is smaller, the cake is smaller. So I don't think any country wants to see the tension to increase from here. On the other hand, some factories have been moving out of China to other parts of Asia, not because of the trade war, but China has become more expensive to manufacture the low value added products. So it makes sense for some of the factory owners to move their factory from China to other parts of Southeast Asia. Vietnam, Bangladesh, even to India, Indonesia, Malaysia. So this has already happened before the trade war. And China do not see this as a problem. Because China do not want to focus on the low-end manufacturing. China wants to focus on the high-end manufacturing, not just for export, but for themselves. Because there's a need for more higher-end products in China to serve the needs of the people who want better products in China. Chinese people no longer are happy with low-end products. They want high-end phones, high-end cars, good alcohol as well, smart homes, technology. So this is where the Chinese government wants to focus, the high-end manufacturing, not the low-end. So very happy for them to move to other countries. When we talk about Huawei, yes, there could be an impact in the short term in terms of how fast they can develop now, given that some of the supply that is coming from the US will become more difficult. We also believe that the trade war is not really about trade, but more about technological competition between the two giants. So with this in mind, China has to spend more money, more research in order to raise the competition, to raise the standards on technology. So actually this means that the urgency to develop technologies is even more now for China. And this will make more technology companies in China spend more on R&Ds. And if Chinese companies cannot sell to the US, Chinese companies can still sell to many emerging countries. You will find that there are many Chinese phones that are made in China but sold to emerging markets. So there are lots of opportunities for China technology companies to sell to other parts of the world, especially to the emerging countries. On the other hand, China can also produce for China consumer as well. This market is big enough. The home market is big enough for technologies. Actually, the best performing mega cap Chinese company are not Tencent, Alibaba, Baidu, or JD.com. It has been some of the domestic companies that are listed in China. The likes of Moutai, which is the killer of China. We call them Baijiu, which is the spirit that we drink in China, very high alcohol content. But these companies are able to have a bigger return than some of these internet companies. There are many domestic brands that are only available in the A-share market, which is the domestic stock market in China, that offer very good returns to investors who are willing to take a look beyond the internet companies. So China is more than just internet companies. There is a big opportunity in the consumption space. It can be consumer products, it can be travel-related names like airports and duty-free. It can be something rather boring like soya sauce company. But these companies have performed very well over the last 3 to 4 years. So this is a market that foreigners are still unaware of. And this is where if foreigners get involved in the A-share, you are still a pioneer. Because foreign participation in the domestic A-share market in China is still very low, only 6 to 7%. However, this will continue to increase with MSCI inclusion. That will take the China percentage up further.